biggest mergers in the financial space, housing giant HDFC will merge with India's largest private sector bank, HDFC Bank. Post the merger, HDFC will hold 41% stake in the bank. Shareholders of HDFC Limited, meanwhile, will receive 42 shares of HDFC Bank for 25 shares of HDFC. Now, the deal is subject to regulatory approvals and is likely to be completed by FY24.
After 45 years in housing finance, after providing 9 million homes to Indians, we have to find a home for ourselves. And we have found a home in our own family company, HDFC Bank. With RERA and IBC, real estate is seeing an increased level of transparency. And mortgage customers can have access to a range of financial products under one roof now. Change is inevitable, but change is beneficial. Change is welcome when it is beneficial to all the stakeholders. So the merger makes the combined entity strong enough not only to counter competition, but make the mortgage offering even more competitive. We will be able to offer all the variations in the mortgage product, which currently as HDFC standalone we are unable to offer, such as an overdraft product.
The trigger point, as you said, is concerned. It's something which we have evaluated over the years. In the past, it did not make sense for a variety of reasons. One is at that time the CRR SLR requirement was a lot higher than what it is now. Secondly, interest rates today are significantly lower than what they used to be. So if we have to raise money to put in for buying securities or for anything else, today the cost of that money will be a lot lesser. And also the regulations have changed. We carry a certain amount of LCR requirements, so we carry liquidity. So today the financial cost of a merger is virtually very, very limited.
Yes, HDFC is going to be merged with HDFC Bank, and the management explained the rationale behind it. One of the key things which was under consideration was because the Reserve Bank of India had came out with several guidelines which included scale-based regulations for NBFCs, as well as the requirement which brings it closer to the bank. Also, the management highlighted that since the interest rate regime was quite low, now this merger was into the consideration. As far as the approvals of this merger is concerned, overall the process may take around 18 to 24 months. Now the ROC filing is the first month process, along with the exchange disclosure which has already been done. After that, SEBI, RBI, IRDAI, CCI, all these approval needs to be taken, which may take up to 4 months. Apart from that, 12 to 14 months will be taken for filing of scheme, for NCLT approvals, creditors approval, and all other regulatory approvals. So overall, the whole merger may be approved in 18 to 24 months.